Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Balaji Amines Limited, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is recorded. I now hand the conference over to Mr. Gagan Dixit from Elara Securities Private Limited. Thank you, and over to you, sir.
Yes, thank you. Very good afternoon and very warm welcome to everyone. It is our pleasure to be able to bring to you the management of Balaji Amines Limited, led by Mr. T. Ram Reddy, who is the Managing Director. Before handing over to the management regarding today's call, following is the safe harbor statement. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinion, expectations as of today. Actual results may differ materially. These statements are not the guarantee of the future performance and involve risks and uncertainties that is difficult to predict. A detailed safe harbor statement is given on page 2 of the company's investor presentation, which has been uploaded on the stock exchanges and company's website as well. I would now hand over the conference to the Balaji Amines management. Sir, over to you, sir.
Thank you, Gagan. Very good evening to all of you, and welcome to the conference call to discuss the financial performance of the Q4 and FY 2023 and performance of the company Balaji Amines Limited. I hope you got the chance to go through the press release and the financial statements submitted to the stock exchanges and uploaded on our website. I would like to address the recent financial results, which, although not favorable as we had hoped, still demonstrate resilience and potential for future growth. Despite facing headwinds in the pharma, API and the agro industries globally, we have managed to deliver decent results. However, we experienced a fall in margins primarily due to the degrowth in the pharma, API and agro sectors. We believe that the performance of our company will gradually improve in the coming months. We anticipate a return to growth and margin levels similar to those achieved before the onset of the COVID-19 pandemic. We are confident that this improvement is sustainable and can be achieved in due course. In the past years, we experienced exceptionally high realization for certain products driven by global circumstances that normalized. It is important to acknowledge their normalization and adjust our expectations accordingly. Our capital expenditures were planned based on the normalized profitability, ensuring that our company will not be adversely impacted by this change. We have taken a proactive approach to manage our investments and align them with realistic projections. Now let me take you through the standalone financial and operational performance. Our total revenue stood at rupees 351 crores in Q4 FY 2023 as against 625 crore in the corresponding quarter of previous year. EBITDA stood at rupees 59 crores in Q4 FY 2023 as compared to rupees 131 crore in the same period last year, with EBITDA margin at 17% in Q4 FY 2023 as compared to 21% in the same period last year. Profit after tax stood at rupees 38 crores in the current quarter under review as against rupees 82 crores in Q4 FY 2022. PAT margin stood at 11% in Q4 FY 2023 as against 13% in Q4 FY 2022. Diluted EPS for Q4 FY 2023 stood at rupees 11.59 per equity share as compared to rupees 25.21 per equity share in Q4 FY 2022. Sales volume stood at 21,589 metric tons for Q4 FY2023 as against 28,877 metric tons in Q4 FY2022. Coming to our standalone performance for financial year 2023, revenue from operations in FY2023 stood at rupees 1,736 crores as compared to 1,939 crores in FY2022. The EBITDA stood at rupees 339 crores in FY2023 as compared to rupees 459 crores in FY2023. Our EBITDA margin was 20% in FY2023. PAT for 2023 stood at rupees 225 crores from rupees 308 crores FY2022. The diluted EPS for FY2023 stood at rupees 70 rupees 18 paisa as against rupees 95.04 per equity share in FY2022. I would like to add that currently we are a zero debt company on firm basis. Now coming to the consolidated performance for financial 2023, the revenue from operations for financial 2023 stood at rupees 2,370 crores as compared to 2,338 crores in FY2022, a growth of 1.4%. EBITDA for financial 2023 stood at rupees 624 crores as compared to rupees 637 crores in FY2022. EBITDA margin for FY2023 was at 27% as against 26% as against 27% in FY2023. PAT for financial 2023 stood at rupees 406 crores as compared to rupees 418 crores in FY2022. Diluted EPS for financial 2023 stood at rupees 147 paisa as against rupees 113.71 paisa per equity share in financial year 2022. Total volume stood at 89,231 metric tons in FY2023 as against 98,179 metric tons in FY2022. For financial year 2023, Amines volume stood at 25,739 metric tons. Amines derivatives volume stood at 36,091 metric tons. Specialty chemicals volume stood at 51,628 metric tons. Coming to consolidated performance of Q4 FY23, our total revenue stood at rupees 477 crores in Q4 FY2023 as against rupees 785 crores in the corresponding quarter of previous year. EBITDA stood at rupees 99 crores in Q4 2023 as compared to rupees 201 crores in the same period last year. EBITDA margin was at 21% in Q4 FY2023 as compared to 26% in the same period last year. The fall in operating margin was primarily on account of degrowth in pharma and API sector. Profit after tax stood at rupees 55 crores in the current quarter under review as against rupees 131 crores in Q4 FY 2022. PAT margin stood at 12% in Q4 FY 2023 as against 17% in Q4 FY 2022. Diluted EPS for Q4 FY 2023 stood at rupees 14.63 per equity share as compared to rupees 33.56 per equity share in Q4 FY 2022. Sales volume stood at 25,505 metric tons for Q4 FY 2023 as against 33,780 metric tons in Q4 FY 2022. For Q4 FY 2023, Amines volume stood at 6,659 metric tons. Amines derivatives volume stood at 8,607 metric tons. Specialty chemicals stood at 11,239 metric tons. Our subsidiary company, Balaji Specialty Chemicals Limited continued to witness substantial demand as well as robust price realization. We logged sales volume of 4,916 metric tons in Q4 FY2023 at our subsidiary plant as against 4,903 metric tons in same quarter last year. We have recorded the capacity utilization of about 72% in FY2023 as against 56% in FY2022. Accessibility for raw materials required for manufacturing products of the subsidiary plant continues to remain a major challenge. If the accessibility of raw materials improves, we anticipate to quickly ramp up the production in subsequent quarters with strong underlying demand from end customers. Apart from the operational performance, I have several positive developments to share. To continue independent representation and strengthen our board, we have recently inducted 4 distinguished individuals as new board members. I am delighted to introduce Mrs. Suhasini Yatin Shah and Dr. Uma Rajiv Pradhan, Mr. R. Mohan Kumar and Mr. Adbala Sheshagir Rao as the newest additions to the board. Each of them comes from diverse backgrounds, bringing with them a wealth of knowledge and extensive experience. Their presence will undoubtedly inject velocity and rigor into our boardroom, enhancing our strategic business operations and providing valuable guidance to propel our company to new heights. I welcome them all on our board. We have implemented certain changes in the redesignation of management roles to better align our focus and drive profitability and growth for both our parent and subsidiary companies. Mr. Hemant Reddy Gaddam have resigned as whole-time director and CFO of the company to focus on subsidiary company Balaji Specialty Chemicals Limited. Mr. Andha Srinivas Reddy, our whole-time director, will also take charge as CFO, and Mr. Rajeshwar Reddy Nomla has been redesignated as whole-time director. CapEx update. Revenues from our newly commenced plants, including DMC, propylene glycol and ethylamines, will start contributing to our top line from the coming quarters. This influx of revenue has the potential to improve the margin profile of our company starting from Q1 FY24. Looking ahead, we have strategic capex plans in place to fuel our future growth journey. We have initiated the capex for setting up the following plants, which will significantly contribute to our expansion. We are progressing swiftly with the expansion project of our N-butylamines plant, which will have a capacity of 15,000 tons per annum. And we expect the plant to be commissioned during the second half of financial year 2023-24. The implementation work of our methylamine plant with a capacity of 40,000 tons has already commenced. We anticipate that this project will be commissioned around March 2024. In addition to these ongoing projects, we also have some exciting new projects in our pipeline. These include the establishment of a dimethyl ether plant with a capacity of 100,000 tons per annum. The DME, a new age gas, holds significant potential in various fields such as replacing LPG for fuel and aerosol usage. We are also exploring other applications and usages for replacing LPG, which will further enhance our market presence. Furthermore, we plan to set up an acetonitrile plant with a capacity of 50,000 tons with a new technology, and a DMHL plant with a capacity of 12,000 tons, and a DMF plant with a capacity of 30,000 tons. These projects demonstrate our commitment to expanding our product portfolio and catering to the evolving needs of our customers. For our new acetonitrile plant, we have an ambitious plan. We will undertake production through a new upgraded technology, which will provide us with a cost advantage. This advantage will enable us to withstand higher prices of acetic acid and ultimately result in healthy operating margins. Now we can open the floor for question and answers. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star then two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudarshan Padmanabhan from JM Financial PMS. Please go ahead.
Yeah, thank you for taking my question. Sir, I have three questions. One is on the demand. On the APIs and the pharmaceutical side, the commentary has been mixed. I mean, there are some companies which have been talking about coming out of the woods, but there are companies that are talking about, issues still persisting as far as competition is concerned. And specifically on the agro side as well, I mean, there are higher inventories as you walk into the El Niño season. If you can elaborate a bit on how do you see the demand scenario, say, in the near term and the longer term. And the second is on the raw material side. I mean, I understand that, we have seen a fair amount of seesaw as far as raw material is concerned. But, have we exhausted all the high-cost inventories? Where do we see the inventory levels rationalizing going forward? And my third question is on your CapEx, specifically on the DME, the dimethyl ether. If I'm looking at how it has been implemented, in Indonesia, they have talked about blending and eventually doing away with imports of LPG. How do you see this kind of, rolling out as far as India is concerned and your specific role in it?
Yes. Thank you, Mr. Sudarshan. See, as far as the situation about the API, pharma, and your agrochemical, you are right. The previous few months, they were facing a lot of problems. What we can see for the last few weeks and this quarter, we have seen some improvements, because the earlier was because of the high cost raw material and low demand in the world market. But we are seeing the improvement, and which may take another 1 or 2 quarters to go to the normal. But definitely it is starting from this quarter, the improvements in the API market, whereby our capacity utilization will improve. And second thing, the raw materials, yes, you are right. Many of the raw materials were high peak in the earlier months, like ammonia went up to 90, 100 rupees, which has come down to 48 to 50 rupees. We expect another 4 or 5 rupees to come down. Maybe 40, 45 rupees should be realistic price for the ammonia. And methanol also. In India, it is taking some time, but if you China, from the $300, $320, it has come down. Today's price, it has come down to somewhere 255 to 260. And we expect in turn to India also will come down to same level, maybe $240 to $250 level, which will give great oxygen for the Indian chemical industry, in turn for the intermediate and also for the API industries. And even acetic acid also, which has went up to 70, 80 rupees, has come down to below 40 rupees. We expect it should be somewhere 30, 35 rupees, but it is 38, 39 rupees. And we expect this will come down in the coming 1.5 months. All these prices will come down. Original expected levels, I can say it is the pre-COVID levels. And third, about the
inventory levels, right? So we should exhaust the high cost inventory by the time, in about 2 quarters.
Yes, you are right. With everybody, but in our company, we have only one raw material which was having high inventory, but all others were going as per the consumption. We were going as per we were traveling with the market. very carefully because of the earlier experiences. Only one raw material, that is for the NMP, and which is going to be exhausted by first week of next month. There will not be any high cost inventory. We will be real time inventory should be there at the price point of view. And third, you asked about the biological ethers. This is really very exciting for us. We were with the Government of India in correspondence with the Niti Aayog for the several months. Of course, we cannot touch the domestic market when we say the replacement for the LPG, but we are going for this RSO market is big, and other commercial markets like using fuel for the heating elements in industrial use and even commercial like hotels and all. There is a huge requirement for replacing the LPG. So we have the big hopes on this project. We expect by end of this financial year we should be in a position to come to some final levels. We got we have the land, we got the environmental clearance, and we just started the detailing and equipment, the ordering also started. Probably you will hear in detail exact date for the next quarter. We will give you exact commencement of this plant. And other project like DMC, which was earlier a DMC and the propylene glycol, then the what you call the approvals, and that has finished. And really speaking, in the last 1 month we have seen good uptake of these two products, and we expect in the coming months these products will go in full swing. At least PG will go in full swing. DMC, we are looking part in the country and part outside country also, as we have taken the outside REACH registration. So we have given already a couple of ISO tanks to the various customers in the Europe and other areas. We expect that this product also will go in full swing. Next.
Thanks a lot, Aljan.
Yeah. Thank you. The next question is from the line of Dhaval Shah from Giri Capital. Please go ahead.
Yeah, hello, Mr. Reddy. Very happy to see a series of new products being launched by the company, as you have always guided. So my question is, now first on the standalone side, we did around 90,000 tons for FY23, and now we have 1 lakh ton additional capacity going live over this year. So this 90,000 tons should grow at what rate, and by FY26, 3 years, what is your goal? What sort of volume are you looking at the standalone level?
It should go more than 100,000 tons every year. There should be minimum 10% growth should be there without adding the new capacities. And again, the new capacities, you are well aware that in the initial first year, specifically, if you remember, I am telling again and again, when we introduce products first time in the country, it will take a lot of time. This you see, I think the last 6-7 months we have started the plant up for DMC and propylene glycol. The real dispatches have taken place only last month and this month. And we have adjusted the stocks, we restarted the plant, and here onwards I think we should be in a position to go 40-50% level, and by end of the year we should reach to more than 70-80% this plant.
Okay.
And other even DME, it will take time to introduce, to explain the people, the replacement when we talk about the new product. But over a period of time, after 6 months or a year, we will see definitely good boom, like all we have done, all other products we experience the same thing. Even in the subsidiary also, we faced a lot of problems in the first 6 months, maybe 1 year also we faced a problem for the approval to bring them back from their international contracts to the domestic just-in-time thing. It took a lot of time. So we expect in the coming years these existing will grow with the 8-10% of the volumes, and new plants immediately starting, which should go first year about 40%, and the next year onwards it should go to 70-80%.
Okay, so when you say new plants, so one is DMS, which is going to come up 60,000. Then you have acetonitrile. another 15,000 odd. And then this N-butylamine, which is 15,000, and plus methylamine.
Let me give the sequence.
Yeah.
So, Dhaval, let me give the sequence. First plant will come the butylamine.
Yeah.
Which is in advanced stage. You will see by September, October, you will see the plant will be commissioned. And why we have taken this first? Because nobody is there in the country. We want to do that first because other products we have at least some capacities we are running. So that's the reason we have taken this into the front bench, butylamine, and we have done the proper survey outside country also. We are expecting good response. So second is the methylamines. So why methylamines? I'll tell you, because the DMF we are not in a position to run the existing plant in full capacity because DMA is becoming short many times. We are not in a position. We are just catering to the other customers DMA and the leftover we are trying to use for the DMF. So when we want to operate both plants, so we need to commission this. Once we commission this, then both the plants will run in the proper way. There's the reason the second will come the methylamines, which is already in full swing. The civil works and other erections are going on. By March 2024, we expect this 40,000 tons will come in the line.
Okay.
For the butylamines. Third plant, we see that DME may take the front bench because of the first time we are coming up and there's a lot of exciting news we are seeing that replacement of the LPG. So in the meantime, we may get some other response from the NITI Aayog also. They have referred this to BIS in the storage point of view. Otherwise, we are open for the selling these aerosol and other commercial market. And after this, then we are along with the DME, parallelly the ACN plant will come, acetonitrile with the new technology.
Okay.
And then we are talking about the DMF, DMHL, both parallel after these two plants. Every year you will see these two plants you will see coming up.
Okay, so this DME and acetonitrile, earlier acetonitrile was supposed to go live by September 2023. Now, does the timeline
go for the next year? These projects will go for the next year.
Acha. Okay, so 24
market scenario, you are well aware.
Yes.
ACN is not doing very well as of now. Not doing well, but we since our technology is different, we believe that we should be in a better position when you compare to the existing technology. But still, the other products are very exciting and which are well good demand. That's the reason we have taken them in the front line.
Correct. So now, sir, considering all this new capacities, by when can we expect at the standalone level, the company to clock around, roughly 180,000, 190,000 tons? By when should we expect that number?
With my current run rate, with current situation, current speed, I think we should be going 2026. We should be in a position to touch double the existing number.
Double the number, 2026. Got it. And on the subsidiary side, anything would you like to share with regards to the IPO and the growth and how do we see there the next 3-4 years?
See, I cannot numbers because being this with the legal restrictions, but I can say that subsidiary has already applied for the new land for the new expansions, which is expected this month. The new land for 100 acres they applied with the government of Maharashtra, which is in very active stage. You will hear that in maybe 2-3 weeks time, 1-2 weeks time. You will hear that. There, I can only tell that they are looking for the new product again, first time in the country. That they acquired some technology, recently acquired some new technology, which is sodium cyanide technology acquired. Probably on that line, there are several products are there, which they are going to do in the coming years. That's what I can say.
Okay. Great, sir. I'll come back in the queue. Thank you.
Thank you.
Yes, thank you, Dhaval. Thank you.
Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Jaiveer Shekhawat from Ambit Capital. Please go ahead.
Sure. Thanks for taking my question. Mr. Reddy, good evening. Firstly, I wanted to talk about realization for your standalone business. If I see the realization, these have seen a consecutive decline over the last 4 quarters. So one, can you explain what is driving this moderation and realization? And even from here on, do you expect further moderation given that your RM prices have also come down significantly?
Yeah. Ravi, thank you for this question. I think this is many people must be having in their mind. I just want to clarify. If you remember my earlier interviews, I was telling that last 4 quarters, everybody in the country, like chemical, intermediate, and specialty chemical, API, pharma, we enjoyed some bonus period. Bonus in the sense, pre-COVID, suppose before COVID, if we have done some EBITDA 20-22%, during this period we have done 39-40% EBITDA. And we can't take that as a standard. Every time I was telling the same thing. If you take now today's results of our company, I'll just give the example. Suppose if you take 20-23 margins on standalone basis, I think 17 to 18% is there presently. And if you take pre-COVID, I'm talking about 2019-20, that time we have done the margins of 16 to 17%. Means there is no major change. If you take standard as pre-COVID. So in spite of all these hurdles, these results have done, we have done better. Our end users like pharma, API, degrowth, almost people have done below 30, below 40%, they worked. But still we could do because of this product mix and all those things. And I expect, as you rightly said, the many raw materials are coming to the normal stage like methanol, ammonia, and acetic acid, even ethanol. So we see that there should be gradual growth from this quarter onwards. It is applicable for, in my knowledge, it is applicable for all the industry, not only for the Balaji. So there should be between 5 to 7% margin improvement should be there from here onwards. For this 1 year, year on year, you can see the improvement in the margins.
Understood. So if I just compare your realization versus pre-COVID, I mean, these are still at a significant premium. So one, is it that a lot of Chinese imports have come into the market, which is further pushing the prices? And if you can just clarify on the point, given that now you're seeing a lot of correction in ammonia prices, even methanol, do you expect further realizations to go down from current levels?
Yeah, but see, the top lines you can see the declining because the raw material prices will go down, whereby your finished product also will go down. But I feel that the margin should improve because of the raw materials will come down, whereby the correction will take place, the margins corrections will take place during this period. And as you said that China, yes, in our case, we have only 1 or 2 products which are coming from the China. Otherwise, 90% of our products, we are not having any major threat. 1 or 2, only 2 products I can say little threat. And we have come out of that. Earlier we used to fight for the anti-dumping and all. But this time only 1 product we feel that we need some support which we are fighting with the government, that is DMF. And that also started improving again for this quarter onwards.
Sure, sir. So one question on your subsidiary as well. So you mentioned in your commentary that you are seeing robust realizations as well as demand for products of your subsidiary. But when we see the results of the subsidiary, I mean, what appears to us is that there has been significant moderation in your realization and volume, even during the quarter. So one, can you resolve this disconnect? And secondly, if I just compare your performance with another listed competitor, which is Amines and Chemicals, which has similar product portfolio, they seem to have done very well. So what explains this disconnect? Your comments here.
Yeah, I'll tell you what happened. There was some raw material problem during this period. We thought that we will catch 75 to 80% of the capacity. We could end at 70 to 73% because there was issue for the raw material in between for 4 or 5 weeks. We could not get the raw material. That is one thing. And second thing, if you see the price point of view, I don't think we have not done well. What we said that we were telling that 180 crores or something, we were telling that that I think we have touched that. I don't think that we have not done what we said. We said that we are having some products in the pipeline which has been delayed. That new expense, totally new. With the existing plant, what the guidance we have given, we have achieved. And regarding the other, I cannot comment that. So I don't know what they are doing. If you go in detail, numbering like tonnage, what tonnage, because we are doing the manufacturing. You cannot compare the other company, they are not manufacturing, they are doing the distillation. If you see exactly, they are bringing the stream and they must be doing other products also. I do not know exactly. But this, because we have done much better when we compare to the exact manufacturers of this product. Like if you take the DSF, Dow, all those people, they could not continue this manufacturing because of the raw material, because of the gas, for the many reasons, specifically European companies. And we have exported this product to China, which is a competitiveness. So we expect in the going forward, as I said in the earlier answer for some members' question, that they have acquired some new technology, that sodium cyanide and all. You will hear in coming months.
Understood. Thanks for answering my question, sir, and all the best.
Yeah,
Thank you. The next question is from the line of Anubhav Sahu from MacPro Research. Please go ahead.
Hello. Thanks for the opportunity. So, my first question is regarding the volume growth. Particularly on your own basis, they had a degrowth of 2%, and particularly degrowth has been more for the specialty chemicals. Could you share which are the key products where we face major challenge? And if you could also talk about, is it more because of, as you mentioned in your opening comment, in some of the products we were facing difficulty in getting the raw materials, and also is it more due to the end market challenge?
See, Mr. Sahu, you are right that market situation was not good, because end of the day, if my end users, my end customers are doing well, then I will be doing well. So if you see the pharma API, because our total basket more than 50-60% goes to the pharma API only.
Right.
So there they were having the degrowth where we could not do very well. That if you ask about the specific products, there is one product, there's a DMF, we could not do very well. The other second product is NMP, where we were having high cost inventory, which we are going to finish this month. And next month onwards, you will not see the high cost inventories. Second thing, as regards the degrowth, when you said I don't know, when you said the specialty chemical, specialty product, or you said about the subsidiary, I didn't understand. Specialty products, if you say that, no, they did. The products like NNP, as I said, the margins have come down because of the high cost raw materials, because of the volatility in the raw materials, which will be corrected in the next month onwards.
Okay. And regarding the specific comment regarding, you're still finding some difficulty in getting raw material. Is it something?
Now, yes, that's like the big companies like Sabik. And there's one company in Thailand, GC Glycol. These big plants went for the shutdown, unexpected major shutdown, whereby entire market is in the short supply. And now they have started. Sabik has started end of last month, and this Thailand plant is coming up in the next month. So there should not be challenging for the going further. We have covered from the other markets. For these 2 months, we have the sufficient raw material. Further going also, there should not be any problem.
Okay. And secondly, sir, I wanted to gauge your stance regarding sustainable operating margins. I'm just trying to, understand it. Like in your opening comments, you mentioned that we would want to go back to margin which were prevailing pre-COVID era, which were probably in the 18 to 20%. I think when you mentioned 18 to 20%, I think are you mentioning it for the standalone business or for the consolidated business?
Consolidated will be 26 to 27%, standalone 22%.
22%. Okay.
Yes.
Okay. And so lastly, just if you could share how much of these for the Balaji specialty, how much of this sales is coming from EDA now? What is the product mix change in terms of revenue?
The product is, suppose, about 5,000 tons per quarter we are selling. 4,000 tons about total sales if we do. I'll give you exact numbers if you want. I can give you. For the Q4 EDA we sold about 4,000 tons. If you talk about the total year, 2023 end, EDA sold about 17,600 tons. Around PIP sold about 13 to 1400 tons. Data is about 15 to 1600 tons. And other products about 8 to 900 tons.
Okay. I think so it's quite together.
All put together about 21 to 22,000 tons. As against last year, 17,000 tons.
Okay.
In spite of the raw material problem.
Got it. I think quite helpful. Yeah. Thanks a lot, sir. Thanks so much.
Thank you, sir.
Thank you. The next question is from the line of Chandrakant Dhanuka from CT Equisearch. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, can you tell me any evidence of the pickup in pharma industry in recent months?
The evidence means my lifting of raw materials speed up is increased in last 2-3 weeks. We have seen there is an increase in the raw material takeoff from the customer point of view.
Okay, sir. And my second question is
projection given by some of the customers.
Okay, sir. And so my second question is how is your DMS business faring currently?
DMF now it is picking up. In between there was a problem because of the high cost raw material and the competition from the dumping from the outside. Now it is improved. So, and in some cases what happened, DMA, when the market is full demand for the DMA and we were not getting that DMA, we are not in a position to allocate the DMA for the DMF plant. That's the reason we are talking about the new plant which is under construction coming by end of this financial year.
So cannot we buy DMA from outside and produce DMF?
No. In country everybody is busy, and there is no additional DMA. Only DMF is coming from outside country, but not DMA. DMA rather some quantities we are exporting outside country also. We are targeting outside also.
And so what is the current DMF price? Can you tell me?
Around 95 rupees.
Okay. And so my second question is how would you explain some 36% drop in receivables in fiscal year 23 at a time when your sale was almost flat?
Can you repeat the question?
So how would you explain some 36% drop in receivables in fiscal year 23 at a time when your sale was almost flat?
Drop in receivables?
Yes, sir.
So that means sale is not increased. Sale is lower and we recovered the fast. That is only.
So why did it happen?
See, we might have, because of the precautions taken by industry, entire industry was not going good. And we thought of where we extended 120 days credit, we might have reduced it to the 90 days. We might have rejected some of the bad customers, and that might have resulted to this. And still, if you want the detail, I'll just check with my mate. If you can drop a mail, we will love to answer that in detail.
Okay, sir. And sir, I also want to understand.
I'm sorry to interrupt, sir. I would request you to kindly rejoin the queue, sir.
Okay.
Thank you. We have the next question from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. Yeah. On the board rejig, was it any regulatory requirement or was it voluntary, given that a significant amount of board has been reached at one go? Thank you.
Thank you, Nagaraj. Let me clarify. Actually, as per the SEBI guidelines, any independent director is there on the board more than 10 years. They are not the independent directors, they can be treated as the executive directors. That's what they say. There's a reason. And in our case, what happened, majority of the directors inducted in a similar period. There is a one month here and there, everybody is finishing the 10 years. And that has happened, is panic in this thing. And there are one or two directors attaining more than 75 years age. That is also another reason. And the reason we have requested and we have replaced all the members, independent directors. And since it has come at a time, people have taken in a different this thing. Actually, there is nothing wrong in it. It is as per the SEBI guidelines.
Sure. Thanks for that explanation. So second question is, there are multiple capacities which we are putting up across products. And you indicated in your earlier remarks that probably in the first year of operation, we'll go up to, say, 30-40% utilization, about 70% plus. What gives us the confidence of lifting this material? Are these products completely import substituted? Or on the downstream side, there are a lot of customers who are putting up or expanding their capacities, and that's why they're confident within a couple of years, 70% plus kind of.
Sorry to interrupt, Mr. Nagraj. We couldn't hear you. The last line we couldn't hear because there was a disruption on your line. So I would request you to kindly use your handset, please.
Yeah, I'm audible now?
Yes, please continue.
Yeah,
Can you please repeat the question?
Nagaraj, I can explain you. I understood your question. See, we have taken, why I am telling you, that before setting up any plant, you are well aware that we will do the perfect survey. When we talk about import substitute, that butyl amines is imported almost 7,000 to 8,000 tons per year in the country. And we checked outside country, my existing customer outside country also about 3,000 to 4,000 tons consumption is there. If I talk about 10,000 tons, I can go first year easily 7,000 to 8,000 tons. And if I take the growth, there will be 10 to 15% growth for these products. Next coming 2-3 years, we will reach that what we are talking about 15,000 tons butyl amine. We have estimated next 4-5 years. We have estimated and we are investing the money, this 15,000 tons.
Right.
And our products also in the same way. And second thing, you said that a lot of companies under PLI scheme, if you go to their website, many companies put up their papers for going for the expansion. Many API pharma industries, because of the last 5-6 months degrowth, they are not talking. Nobody is talking, including no TV show, nobody is talking about the pharma API. But if you go back years back and they see their papers in the PLI scheme, everybody is talking about the expansion. There are 500 companies put up their papers. I don't know how many companies have got the approval for their PLI schemes. So there, all these products, these are all basic products for any new molecule comes, 1 or 2 products will go in that. So that is the confidence what we can see. If not today, to tomorrow, definitely all these products will go in full swing.
Right. Just one clarification. Any competitors globally are also expanding their capacities, or they are relatively, kind of mum as of now, and we are the ones who are in Asia or particularly in India are expanding capacity?
Must be doing outside, but I do not have the exact numbers. But definitely there must be some expansion going there, and some BASF is shut some of the plants in Europe, and they are starting some of the plants in China, and some of the plants in other locations. Like many people are doing. It's not like that we are only doing in India, but outside country also these expansions activities taking place.
Sure. Thanks for answering all the questions and best of luck, sir.
Thank you. Thank you.
Thank you. The next question is from the line of Jiten Parmar from Aurum Capital. Please go ahead.
Yeah, good evening. My question is on the capacity utilization. what was the capacity utilization for FY24?
This is total number of plants, different plants are there. You can say that all plants together, it is somewhere 80-85%.
Okay. So our capacity is around 231,000. So what was our volume for the whole year?
See, 98,000 tons. You are taking which are under expansion. Like you see, dimethyl carbonate, propylene glycol, they just started. You can't take them as a new capacity. Like other capacities, we have shown 231,000 tons capacity. But if you talk about the methylamines, 48,000 tons, it has run 95%. But out of that, 80% is used in the various products.
Okay.
That cannot be counted as a separate capacity, right?
Perfect. Okay. And my second question is on what will be the capex for FY24 and FY25, and what will be the source for that?
See, for the current year, as on today, I'm happy to say that company is at zero debt, and even we are not using the working capital, where we are eligible for 200 to 300 crores working capital we are eligible. We are not using a single rupee for the working capital. Rather, we are sitting on the cash which will be utilized for these new expansions. And as per the current situation, current calculations, we are going to do all expansions with the internal accruals. And this year, for current financial, we are expecting about around 250 to 300 crores. If everything goes well, we'll be spending 250 to 300 crores on these proposed expansions. And the same thing in the next year also.
That's very good. Thank you so much. And just my final question is, what would be the outlook for FY24 from volume growth and from
volume growth? We look from 10% volume growth. We are looking until some major thing comes, the hurdle comes. Otherwise, we look with current situation, current projection, we can go easily 10% volume growth.
Okay. And margins, do you think we will improve from what we did?
5 to 7% margin should increase with the current levels.
Okay, great. Thank you so much.
There's a lot of change. There's a more than 10-15% gap has taken place when you compare to the earlier and current. So that gap will not going to improve immediately. As per my view, this current year there should be 5 to 7% improvement should be there in the margins. And same way in the next year and next year also it should be improved.
Perfect. Thank you so much for answering my questions, and congratulations that you are doing all these capacity expansions using internal accruals. So that is very good. Thank you so much. Thank you.
Thank you. The next question is from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yeah, Mr.
Raju.
Thank you for the opportunity. Sir, I had a question on the subsidiary. Last time you had told the current products what we have in a subsidiary, so we can do expansion 15 to 20% by debottlenecking. So I would like an update on that, and derivatives were planned on those. Because right now in the Concall you have told that 4-5 new products are planned, and last time also you had told 2-3 years EDA capacity will double. So can you please clarify?
See, Raju, there are 3 things opportunity for them. Number one, if the situation demands, they can double the capacity, because present capacity they already reached to 80-90%. The way the growth is taking place, the way the imports are happening. Still this year we have seen 30,000 tons has come from outside. Earlier when we set up the plant, that time we said that imports are 30,000 tons. Today total consumption has become more than 45,000, whereby we could cater only 20,000 tons. Still 50% of the products are coming from outside. If the situation demands like this in the coming months, maybe 2-3 months, they may take a call after doubling the capacity. That is number one opportunity. Number 2 opportunity is the new products, along with the derivatives, the new products which I was spelling out on the sodium cyanide technologies. There are n number of products. I cannot disclose them because of some restrictions, which you will hear maybe not more than 2 months time. You will hear everything. All these products will come into the place. They already applied for the land. Probably next 1-2 weeks we will hear that land allotment from the government of Maharashtra. That is one thing. Third thing, we said that there is a debottlenecking. Yes, part of debottlenecking already taken place, and this we cannot take because a lot of shutdown time is required. Because of the market situation, we cannot close the plant for more than weekdays. We are just taking the shutdowns on installment. 1 month, 7 days, do some work, run 1 month and take 7 days and do some work. Like that, it may take another 3-4 months to hear about the debottlenecking capacities adding.
Okay, thanks for the update. My next question on DMC. Sir, last time you had talked about 3 more carbonates planned, and you had told something of blending in diesel of DMC. And you had also said we may plan for new 50,000 tons new plant for DMC. So could you update?
Yes, I'm still I'm telling. My statement, this was basing on the lithium battery manufacturers. There are 5-6 companies in the pipeline. Everybody is talking past 5-6 years. They are talking. We are coming up. Until otherwise somebody kickstarts of manufacturing this, we cannot take the decision on that additional 50,000 tons. All the 6 people are talking. Every 1 month we are getting the calls from them for all these dimethyl carbonate, methyl ethyl carbonate, ethyl carbonate, and even NMP also. These 4-5 products, one route is required NMP also. So the most positive thing is in last 6 months we heard that the lithium deposits in the various states. One is I think Srinagar, and second thing is Rajasthan. I think these 2 states, if they get this lithium, this is very positive for the country, and thereby we have very positive thing. If somebody starts, even a single company starts, is enough for me to go ahead. Recently we had a discussion with Amar Raja. They were talking about very big plans, and where we have the NMP, they are talking about more than 10,000 tons in over a period of time they may consume. So like that, if all the 5-6 companies comes to them, then we will have all these things. This is all subject to consumption. Otherwise, DMC is not consumed in the other fields in big quantities. Second thing, diesel we said, but there was a lot of, we tried with the authorities. There is a lot of restrictions for this being a subsidiary incentive by the government of India. I don't think we should put our legs in that shoe. So the reason we are just taking slow on that subject.
Okay, and my last question was on ACN. Now, sir, we have existing 9,000 tons and we are putting 15,000 tons. And sir, alkyl amine has already 30,000 ton capacity, and they have talked about in their recent Concall that they will have an edge over us because of their experience in making this product for a longer period of time, and their capital costs have been absorbed. So could you throw some light on this?
If that is the case, my all methyl ethyl everything is capital cost is absorbed. I am zero today, but still I am fighting with them. It's not like that, Rajiv. I am telling means if you think and if you evaluate last 1 year why we are waiting. The existing plant we are not running also. You just go to the market, the import price is 150 rupees, and the our cost price also is 150 rupees only. We don't want to make the losses. Even that 9,000 plant also we are not running today because of the situation. Until otherwise I get edge on the technology. So we are talking about the new technology, whereby definitely we are sure that we have done the pilot plant. Now we are going for the main plant, whereby you will see that maybe in the world 1 or 2 people must be using this technology once we start that, by the time we start.
Thanks for the update. And my last question, all these new projects which you have announced, methylamine, DME, ACN, DMA, HCl and DMF. So by when do these 5 complete?
I have told you butylamine will start the second half of this year. Methylamine will finish by March 2024. Then next year we will have dimethyl ether and ACN. Both the projects should come parallelly. The next after next year DMF and DMHCl should come. If in between something new product, exciting product comes, and these products may take the back bench and that will come to the front bench like this, DME and butylamine have taken the same place.
Okay. Thanks for the update.
Thank you.
Thank you. Thank you.
The next question is from the line of Ranveer Singh from Nuvama. Please go ahead.
Yeah, Mr. Amir.
Yeah, thanks for taking my question. I think most of the questions are answered, but just one clarity. On EBITDA, you guided 22% on standalone and 26% on consolidated, right? For
yes.
FY23.
Yes. Yes.
And so I was a little confused because in press release you were saying that we'll have a pre-COVID level of EBITDA, and that is what you are guiding. But after three facilities, three products are coming in Q1 FY24, 3 new plants that will join revenue stream. So I thought that would have been margin side. We would have been shown the better margin than what we achieved during pre-COVID. So is this because that Amines is in a their EBITDA would be lower than what we achieved in pre-COVID?
Not like that. I'm just telling you a little conservative basis. This year you have seen standalone basis 19.55%.
Yeah.
And all the time I'm talking is a 22%. So that means it will touch and it will add another 2%. 22% should be sustainable for the whatever the products we are making in the Amines standalone. And when we talk about the consolidated, definitely that specialty chemicals will have the different margins, total different ball game. There definitely will have more margin. That's the reason I'm talking about 26% when you consolidate both. 25 to 26%.
Okay, understood. And after Q1, once that new project joins revenue stream, the scaling up will happen gradually. So, what would be the capacity utilization roughly on a ballpark number by end of year? Just wanted to understand how fast this can be ramped up.
This butylamine, I think by end of the year we should be in a position to operating at 50% level, 40 to 50% level. And next year we should ramp up to 70 to 70%.
Oh, fine. That's good. And secondly, just on Indian competitors now, I will talk about that alkylamine. Despite all these headwinds and challenges, they have been able to show sequential growth there in revenue. So just I wanted to understand because our gap is, it's a big gap if you see the kind of decline we saw in Q1. So where was the disconnect? What is the differentiating factor?
I do not know. We'll have to see. I do not know what they are doing. What are the products they mix? We have not gone in detail. But in our this thing, if you see the consolidated, both, you cannot separate this company. This is the part of the Balaji Amines subsidiary also. So why can't we call the consolidated numbers? So we are doing much better the consolidated basis.
Okay, but otherwise in ethylamines, have you been able to retain our market share or we see some?
Yes, we are selling. You can ask in the market. The problem is you are just seeing only numbers. If you go to the market, then you will understand. Or if you visit the plant, I request all the members who is asked questions. We are going to ask a question. I request members to visit the plant. If you want any assistance, you can drop a mail to our CS. And once you see the plant, the level of the technology, the scale of the operations, everything you will understand once you visit the plant. So I wish all the members make one visit to the plant in the coming months. So there you will get the better understanding.
Sure. Thanks. And one last one on related to that raising in directors and management.
Yeah.
Just I wanted to understand, like in a CFO, we have now full-time directors.
That also I will tell you before you ask. What happened? You see, both the companies we are having common board.
Okay.
All 5 directors, 5 executive here, 5 executive there. So now what we are doing, because that company is growing big way and this company is also having various things, we just want to divide the responsibilities. This director is resigned here and going to take additional responsibility in Balaji specialty. And it has happened that he is holding that additional CFO portfolio. There's a reason people are talking CFO. Actually, one director is resigned here and going to take care of additional responsibilities in the Balaji specialty chemicals. Here also, I was there as a director. I have resigned from the subsidiary, and I'm going to give the full time for the Balaji Amines. So we have just reorganized the total board to give the take the more responsibilities to run in the perfect level.
Understood. Because I was little, that I did not understand that the tenure of his appointment would be on 31st March, on 26th. So that I wanted to understand what is the remaining tenure. So it was because that earlier CFO had a tenure up to that March 26th. So this was not
many companies you will see the CFO is separate from the director, right? Here what happened is the director is holding the CFO post. There's a reason it has happened. The director is going to the other company, taking the additional responsibilities, and he is supposed to leave this post also. Another director is given that additional charge of the CFO.
Okay. Understood. Okay, thanks for clarity.
Thank you.
And all the best.
Thank you very much.
Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Gagan Dixit for closing comments. Over to you, sir.
Yeah, thanks for all the participants, and special thanks to the Balaji Amines management for sharing their views on the company's fourth quarter fiscal year 2023 performance. We take this opportunity to thank Mr. Ram Reddy and his team once again. Any closing comments, sir?
Yeah, thank you, Mr. Gagan. I thank you all the stakeholders, all the shareholders, investors who were with us for the years. And once again, I request them, if anybody is interested to visit us, they can visit. And also, probably some of the people who have missed the questions, they can send the mail to the cs@balajiamines.com. We will love to answer all their queries anytime, any type of questions. Thank you once again. Thank you very much.
Thank you very much, sir.
Yeah, you can connect with us.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.